Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new edition of Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the dollar index, S&P 500, ASEAN, Euro dollar and also gold. Now looking here firstly on dollar index, well, we are clearly in a bullish mode here, but the recent moves here above this 2016 and 2020 highs was just temporary. What we are seeing right now is a slowdown in price, so ideally that's going to be just a pullback before market moves even higher. So I will be tracking a counter trend movement, a fourth wave, which as you can see here on a daily level could retrace theoretically to 38.2% compared to the previous 5-wave extended structure within wave 3, or maybe we sometimes should pay attention to 23.6% retracement as well. But since this is still only one leg, first part of a minimum 3-wave substructure that is needed in wave 4, I think that this is just the beginning of a deeper price action. So that's why I will most likely focus on 99.50 or 100 area. Now looking at the 4-hour chart to give you a full better perspective, notice that we can clearly count 5 waves down here, and normally 5 waves from the highs or from the lows suggest that the trend, or at least temporary reversal in the direction, is happening. More importantly, this 5-wave drop also took out some of the previous swing lows, which is another indication for a change in trend. So now when we have these 5 waves down, we can say that this is the first leg, as I said earlier, of a minimum 3-wave drop in a higher degree wave 4. So watch out for a wave B rally. Now the first resistance is at 102.50. The second, a little bit higher one, is at 104 level. So I will be expecting new sell-off from around this area in upcoming days. For now, this wave B is still in the middle of its development, I think. At the same time, what is also interesting regarding dollar weakness, so we are expecting more weakness on the US dollar, and what we recently seen is that also stocks are now recovering. So this recovery on stocks is now also suggesting that dollar could see more weakness, because risk on can be back. So to give you the outlook here on the S&P 500, I'm tracking a big ongoing bullish impulse, and looks like that there can be more upside after this recent pullback from January highs, that I see this as a corrective wave 4. Why? Because drop is in 3 waves. So always when I see a 3-wave drop from a new high or from a new low, I will try to label this as a counter trend movement, because top picking or low picking can be very tough here in this market. So it's much easier to follow the trends if you will label each pullback in 3 waves as a potential correction. More importantly, we have seen a very nice reversal from the lower side of this downward channel. As you can see also on a smaller degree time frame chart, you will see that this latest drop was equal to the first leg here, not only in price but also in time, and now we are trading reversing higher above this trend line support, trend line resistance. So it means that this market can be changing in direction, and I'm expecting more upside. So now when we have stocks coming to the upside, when we have US dollar trying to also show us evidences of a top, well, this is all risk on sentiment, and usually in this environment there will be also yen crosses that will try to move higher. In fact, Bank of Japan is a completely different policy side compared to other central banks. So of course other central banks, as you know, they are very hawkish, they are looking for more hikes in the future. So this central bank divergence between Bank of Japan and other central banks is something that is driving these yen crosses higher. And now when we have also, as I said, stock market higher, well, that's the perfect scenario for these crosses to see even more upside. Here on ASEAN 4-hour chart, we can see a very nice 3-wave drop, followed by a very nice push to the upside. We also recently have seen a broken trend line resistance here, so this is normally a confirmation that market can be rallying further back to these highs around 95.80 with 5 waves. So in upcoming days, sessions, just keep an eye on these 4th wave retracements. I think that there can be a chance to join this trend while the market is trading above 91. Also, let's take a look on the euro dollar. Now there is still, as you know, ECB looking to be very hawkish. There are bets that they will do a 50 basis point hikes in on the next meetings. In fact, this embargo on oil from the Russia could cause even more inflation. So definitely ECB will at some point have to step up here really fast to trying to limit the inflation with higher rates. So this is something that is driving this currency higher for the last 2-3 weeks. From an Elliott wave perspective, I still think, however, that this can be a wave 4. We are here at the previous 108 level potential resistance, but since again this is only the first leg, I think it's a wave A, so watch out for more upside here within wave 4 after next dip. Now this dip could already be underway, because notice that market is now coming here, coming lower below this trendline support. So ideally that's a wave B in progress now. Very nice support for potential longs could be at 105.83. Invalidation level is obviously at the lows. Okay, so as long as we are trading above that low, I think that there is chance for this euro dollar to recover much more in the future. Okay, now let's take a look also on gold. Now gold, big picture, nothing has really changed. We are just chopping around for the last 2 years, but still we are, I think, at the lower side of this range. So if we just try to stick with this basic technical analysis, well, normally in this range bound market you would expect that price will bounce from the lower side to the upper side of the market, okay, so of this range. So what we are seeing from an Elliott wave perspective is potential triangle, a big one here underway. So you had these 3 waves down for the first wave A, then you have 3 waves up for wave B that moved very close to this previous all-time highs, and now you have another 3 wave drop. So if we consider that we are still here just in a contracting range and that market could turn higher, well, ideally this is going to be a triangle with 3 wave rise now into wave D. So looking at the 4-hour chart, I really love this development so far. Notice that we had these 5 waves down, bottoming just slightly below 1800, and then market rallied above this trend line resistance. So this is the first leg of a 3-wave recovery that I think can be underway back towards this 1900 level. Also watch out this RSI divergence line. It causes, actually not it causes, but it showed us back then when market was trading here at these lows that we could be bottoming since bears were losing strength, confirmed here by the RSI, which hasn't traded at new extreme levels. So usually this divergence will occur when market will bottom, and normally that happens between wave 3 and wave 5. So this was a very nice reversal, and looks like that this is the first leg, as I said, of a 3-wave recovery. Now I'm tracking wave B. Very nice support is here around 1820, 1830, and the next one is around 1800. Okay, so I'm looking for this area to be a potential buy zone or super zone here by the end of this week. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.